Hey everyone, Mortgage Nerd here. So what is better, to pay off your mortgage faster or pay it down faster? The heck does that mean? Well, in olden times, and not the times of cavemen, but let's say the times of the 1980s, sorry those of you that are old enough to have had a mortgage in the 1980s, rates back then were up to 18%. That's crazy. I have clients that tell me that we were so happy when we had a 12% mortgage. When I was coming up in the real estate business in the 2000s, and even when I bought my first properties, rates were in the 5s and 6s. So even back then, when you look at an amortization schedule, that's what tells you how much of your payment goes to principal and how much goes to interest on any given month over the time of your loan. What do I mean? If you go down to month 12, how much money is going to principal, how much money is going to interest? Well, in a 5 or 6% rate, less than 20% of your payment is going to principal and the rest is going to interest. Meaning if your payment was $1,000, only $200 or less was going to principal. That's crazy. That's like no money going to principal. Almost everything was going to interest. So yeah, you want to pay that thing off as quickly as possible. Maybe pay it down. Maybe make biweekly payments. Maybe pay extra. But now with rates in the 2s, do you really want to do that? At 2.25, your very first payment, you're paying more money to principal than you are to interest. At 2.375, it takes you 11 months for more money to be going to principal than interest. Even in the high 2s, yeah, you're 2-3 years down the road before you have more money within your payment going to principal than interest. What if you rent that property out? Someone else is paying that for you. Let's say it's a $2,000 mortgage payment. They're putting $1,000 into your savings account, essentially, into the equity of your home. $1,000 of that $2,000. So that's $1,000 a month. That's $12,000 a year. It's going into a retirement account essentially for you that someone else is paying. Maybe you're paying it. Why would you want to pay it off faster when inflation needs to be around 2%? So you're getting your money at next to nothing, less than 1% off of inflation. Let's not think that paying it off faster or paying it down faster is better, or which one is better. Why not look into putting your money into your retirement account? Why not look into getting a second property with these low rates? And now you have multiple properties working for you, multiple properties where there's more money going to principal than interest faster than ever. This is how you create wealth through real estate. Our parents and grandparents did it. They did it with much higher rates. So imagine what this generation is going to be able to do with these incredibly low rates over the next few decades. Phil Stevenson, Mortgage Nerd, helping people build wealth through real estate. Thank you.